Generally, a plan must be audited when it has more than 100 eligible participants on the first day of the plan year, or 120 if the plan hasn't been previously audited, and 100 every year after. It is important to note that an eligible participant is anyone eligible to participate in the plan, including employees who have met all eligibility requirements but aren't participating in the plan. It also includes terminated employees who have balances in the plan on the first day of the plan year. An audit looks at two major areas. The first area is compliance, which is to verify that the plan is operating in compliance with certain Department of Labor and IRS regulations, as well as with the plan-related documents. The second area is financial reporting, where the auditors determine the accuracy of the financial information as reported on Form 5500 and the plan financial statements, including required disclosures.
That was a great overview, Kyle. Once you determine if your plan requires a 401k audit, you may be asking yourself, how can I prepare for the audit and what items will the auditors request? Some standard items include bank statements and reconciliation, payroll reports, meeting minutes, as well as other items. The auditors will also provide you with a sample of participants and request to view their employee files and compensation support. The auditors will ask if there have been any new amendments to the plan that were made during the plan year. There may have been amendments to add provisions included in the CARES and SECURE Acts. As the plan sponsor, you have the fiduciary responsibility to act in the best interest of the plan participants. Some additional fiduciary responsibilities include making sure the plan is operating in accordance with the plan agreements, keeping plan expenses to a reasonable amount, and holding regular meetings to discuss such topics as investment performance.
Thanks, Ashley. Those are great insights. Additional areas the auditor will need to complete are internal planning and risk assessments. As part of that, they'll need to gain an understanding of the design and implementation of relevant internal controls. In doing this, they will likely perform various walkthroughs of key procedures. One way to be prepared is to make sure you are reviewing your service organization controls SOC reports and the complementary user controls identified within. If you have good, strong controls over various audit areas, it will certainly make the audit go smoother. There are various audit areas in which the auditor will focus on depending on the risk they identified. This may include contributions received and receivable from both employees and employers, investments and related income, even in a limited scope audit, benefit payments or withdrawals, and notes receivable from participants or loans, to name a few. And finally, from a financial reporting perspective, the focus will be on the fair presentation of the financial statements and its related disclosures, as well as the Form 5500.
For questions on ERISA audits, please contact your on-track early advisor for more information.